Sami, welcome back to PreMarket Prep. How are you doing this morning?
I'm doing great. Good to be back. Thank you.
Well, we've had an 8-day winning streak going for 9 in a row today. What are you thinking? Are you liking this price action recently?
I'm loving the price action because I'm in it. I'm benefiting from it. We had on August 2nd, I think, no, August 5th, when we gapped down, we had a 4+% gap down in the market. And I've been trading full time since April of 2007. And ever since then, I've never seen the market gap down 4% or more and not get bought. Not once. I don't think I've ever seen, except maybe during the pandemic, during
2008. Sammy, I'll tell you, 2008, we had a lot of 4% down days that ended up down more. So there was a few in 2008, but you were young. You're young buck then. So you're probably the high flyer, and you buy it, and it comes back eventually anyway.
You might be right, but
to your point, in the last 14 years, maybe in the pandemic and COVID in March, like you said, but to your point, it's usually a good idea to be looking to buy stuff when we're down 2, 3, 4% as opposed to sell it.
In addition to that, the market was already dropping hard. So this was, to me, this was like a novice exhaustion gap.
Yeah.
And it was a good time to buy. So, but now that we're up a lot, I actually expected the market to come back in a few days ago.
Me too.
And it just kept going up. So now I'm looking for a narrow range bar. And once we have a narrow range bar on the daily chart of the market, the SPY, the Qs, whatever you use, and we take it out, then that would signal the reversal. That would be, that would be the time to sell or to trim some of the positions. That's what I think, at least.
You've been trimming into this rally now, though, like on all these stocks. It's been a pretty impressive rally. I was looking at some stats this morning. Nvidia, I think, is up over 30% from the lows. There's probably 50 major names, in tech that are up 20% from the lows. It's been a very impressive 9-day rally here, Sami. So you are lightening up into this and not chasing.
I wish I hadn't, but
I wish I hadn't too.
Exactly. I wish I hadn't, but I have lightened up on some of the positions for sure. Not on Bitcoin, not on the TQQ, not on Ethereum. Those I didn't lighten up, but on everything else just about, and not on Robinhood. Those I haven't lightened up, but everything else I either sold already, which I wish I hadn't. I had Nvidia, I sold it, or I lightened up. But it's been nice. It's been really, really nice.
So what do you do now? Let's say forget about the positions you currently have and you're lightening up. Let's say you're a trader and you're looking for opportunity here. Are you waiting for the rollover to try to get short, or you just looking for pullbacks to buy? How do you approach the market now that we've had this incredible 8-day rally?
Yeah, I don't think you look for pullbacks to buy. I think you look to short or to trim. But the problem is, for me, I don't have anything on my watch list that looks good short. I'm scanning and I'm looking for shorts. There's nothing coming up.
What do you like to see? You like to see similar to what you said with the indexes, the pop, a little bit of consolidation, and then a break of the lower end of consolidation. Do you ever look for volume? Are the buyer, where are the buyers? Give an example here. I don't know. I keep going back to Starbucks, so it's probably going to 180 or something. But on that day when it had the CEO, I traded 157 million shares on that day. You know how much it traded yesterday? 14 million. 14 million. So you're going to need a whole round of buyers here. Is the volume something you look at?
So here, here's my take on volume. I think it's the most overrated item in technical analysis. There's only 2 uses for volume. It's when you have capitulation, when the stock or the market is dropping really, really hard and the volume spikes, that tells you the last batch of sellers is probably out and the bottom is in. So it's great for picking bottoms and tops.
Yeah.
And there's a couple other uses, but that's about it. The only time I find volume is useful is when I'm trying to pick the bottom after a really big drop or a really big rally. Because once the volume spikes, usually the bottom is in.
Yeah. You're
But
looking
that's
at
it.
capitulatory events on both sides.
Yeah, if you look at the market, actually it's been rallying really hard on declining volume. Just take a look at it right now, the SPY or the Qs. Look at the volume. Look how declining it is. Now, if you let the volume, the declining volume on the way up, talk you out of being in the market, you've missed out. So I could trade without volume. I literally don't need it, with the exception of when I'm playing climactics, when I'm trying to pick the bottom or pick the top. That's the only time I really need volume. Again, there's a couple other uses for volume. When a stock is basing and the volume is declining, that's called continuation volume, which means the stock is actually going to break out in the direction of the trend that preceded the base. So that's good. And when a stock breaks out on really strong volume, we call that pro-igniting volume. So that confirms the move. But the problem is you see the volume after the fact. So it's of no use almost.
Yeah.
So to me, volume is truly the single most overrated item in technical analysis.
I completely agree. I actually don't use volume at all. I don't have it on any of my charts. The only thing I do is similar to what Brian says, is I have filters that scan for stocks, and I have a volume constraint on that because I don't want something trading by appointment only. If it's stock I don't know, I need volume. I need I need a stock to trade a few 100,000 at least a day for me to get in and out of it. So that's the only time I ever use volume. But on my charts, I have no volume. Like, it's not on there anywhere. I know Joel looks at volume a bit, but I don't look at it at all. I like the capitulatory.
I agree with Sammy on that. I mean,
I do too. Sammy making a good point.
If you're looking at the SPYs here, on August 5th, we all know what that is, traded almost 150 million shares. Okay?
Capitulation.
Right.
That's it, because it's down a lot and then gaps down 4%, and look at the volume spike. That signals the bottom. So that it was useful that day. After that, no use.
What about so before you would get so you're just looking for another big down day like that to reload, or I mean if you have a big down day now on big volume, that's what you're looking for. So you're not using that as an indication as a top. What about, I mean, let's switch to fundamentals here just real quick. I mean, quiet run up into Jackson Hole. Is that ever something you factor in? Or you just stick with your charts and whatever. But I think that's why you're having a little bit of hesitation here in the markets. And any outlook on that?
I really only stick with the charts.
Okay.
I'm always curious about financial news because my background is accounting and finance, but I really, really stick with the charts because that's the only truth that I know for sure. Everything else is just subject to interpretation. So I don't buy into any like news events. Now, if I see the market running up really hard into a news event, that's probably time to sell because it's, the news is baked in usually. So if I have a really big move up, which we do in the market right now, into a news event, then that's not a good thing usually. I'd want to get out of my positions usually. Some of my positions are long term, so I don't touch them anyway. But the short term positions, those are the ones that I try to trim.
I want to expand on that. Do you have like a separate account that you have long-term positions in? Because I have my long-term positions in all a separate accounts, so I don't look at them, because if they were in my trading account, I would trade out of them. Do you keep separate accounts for that?
I do have a separate account, but I have been trading even the long-term positions in the same swing account. I did that with Tesla because it was a really large position and I didn't want to look at it. I was afraid, I'd mess it up. So I did put it in a separate account for a long, long time. But now all my positions are in one account, even though I have two accounts with TradeStation, but they're all in the same account at the moment. But it's a good idea. So you're not looking at it every single day. You're not tempted to get out of it. It's a good idea to put the long terms in a long-term account that you're not watching every day. So totally agree.
What, right now, Sammy, as the market kind of heats up, we've seen a broader based rally, different, industries, smaller caps performing well. Have you started looking at other names outside of the Mag 7? Or are you still focused, more so on like the Teslas, trading the SPYs? What's your strategy been during this run up?
I think when the market itself is really moving, which is what we had the last few weeks, you want to focus on market related stocks. You don't want to look at things small cap or things that may be on their own page. You want to take advantage of the move in the market. So the focus has been market stocks for me. But yeah, I'm always interested in small cap because when they move, they really move a lot. The IWM has been a big disappointment to me because every time I think it's going to go, it ends up not going. This is the second time that I, in 2021, IWM went flat all year and then finally broke out. So I switched out of the SPY in my 401k, put it all into the IWM, ended up being a breakout failure. The same thing happened to me not too long ago. It was like at the end of July. Yeah, exactly. Yeah. July 31st. I switched out of the SPY into the IWM because the IWM was breaking out only to end up with a false breakout. So, right now I don't trust the IWM. I don't like it that much. I have traded in and out of, I don't care if it's a small cap or a large cap. I usually don't even know what the company does. If the chart pattern is good, I go for it. I have some small cap positions and I have some large cap positions. I have Disney, I have Baba, I have Tesla. So I have some large cap, small cap. It's a mixture. It all depends on the chart for me. But if if the market is moving a lot and I'm trying to catch the bottom or the top, I really try to focus on market stocks, the big names especially, because that's what moves. That's what's going to be moving with the market, typically.
Got it. And then, say we keep running, we keep going up. It's say we go for a 9th green day today. At what point do you start hitting where you think we've gone too far, too fast, and you start taking some profits or become, net short of where we're at?
I'm not going to be net short, unfortunately. I mean, maybe that's fortunately because I don't have any good shorts. But here's 2 ways I identify the top. So if we have a wide range green, like a wide range bar, so a really big up day, that will probably be the top because we've been moving up a lot. So you get a really big move up, then that's probably the last batch of buyers finally jumping in. No more buyers, the market rolls over the next day, probably. So either a wide range, so I'm looking for either a wide range bar in the market on the daily chart or a narrow range bar. Because a narrow range bar, like a cross or something like this, that signals the shift in momentum. Once we take out the narrow range bars low, then I would expect the market to roll over. I always tell my students, when you're looking for the reversal, so you either look for, again, the capitulation, or you look for, it's like a driver making U-turn. You always have to slow down to be able to make the U-turn. So that's what I look for in the market, is slowing in the momentum, a narrow range bar on the daily chart. And then if we take out the narrow range bars low, then that signals the U-turn or the turn in the market. So that's what I'm looking for, either a narrow range bar or a wide range bar. More likely to get a narrow range bar because we already got an increase in the range yesterday, sort of a wide range bar. So I'm thinking today would be a narrow range bar, and tomorrow, if we break under today's low, would signal the reversal in the market, in which case I would start aggressively trimming what I have. Some of the things that I have certain positions that I will not touch, and if they come back down and they don't work out, so be it, because they're long-term plays. But I have some swing positions that I will definitely be trimming.
There you go. Sami, we've got this QR code up on the screen for our viewers to join your free webinar, which is not tomorrow, but on Thursday. What will you be covering in this webinar? What can viewers expect?
So we've been talking about mostly swing trading and carrying positions overnight. What I'll be covering on Thursday is my favorite intraday strategy, which is trading gaps. The thing about gaps is that they create shock value. They trap traders. You get into a stock thinking it's going to go higher, and then the next day you wake up and you're down $5,000-$10,000. What do? So people start, and when you have 100 people in the same situation, you create, you create shock value. People get trapped, and so they start acting out of emotion rather than cold hard logic. And as traders, our job would be to read the psychology and take advantage of it. So I'll be teaching and talking about gaps, which is my number one strategy when it comes to intraday trading. It's almost all I do. I do the reversals, the climactics, but I do like one a day maybe at the most. Gaps, I do several trades every day, especially at the open. So oftentimes, like yesterday, oftentimes I'm busy at the open, and within 15-30 minutes, I've already, I've made the day. Like, and I spend the rest of the day maybe giving back money or not making any money. So
Middle of the day stop.
So I feel like all you need is the first 30 minutes at the open as a day trader. And with gaps, you can actually take advantage of the morning volatility and be done for the day within 30 minutes almost. So that's what I like about gaps.
All right. Well, Sami Abusaad, again from T3 Trading, thank you for joining us here on Benzinga's Pre-Market Prep. We love our T3 Tuesdays. Always some great guests from there. Sami, thanks again for hopping on the show today, and hope you enjoy the rest of your day.
Thanks so much. Thanks for having me.